Ladies and gentlemen, dailies and men to gen, we are welcomed to the last video on this playlist. And today we are going to be combining every single thing we've learned so far, basically from market structure to liquidity to key levels to entries to all of it. We're going to be combining everything today, and we are going to put everything together. We're going to name it or putting it all together video, right? We'll call it a putting it all together video. And today, instead of using explanations, we are just going to analyze charts. All right, we're just going to analyze the chart. We're going to get a case study, and yeah, we're going to use it to explain. All right, so today our case study here is going to be EUR USD. We're going to use EUR USD. We're going to use EUR USD because I'm just trying to trade for the year. Again, I just started recently, like yesterday, right? So I'm just going to use an ongoing chart. I'm going to use an a present price action, right? While it's still running. So stay with me. All right. So this is EURUSD from the weekly time frame. All right. This is EURUSD from the daily time frame rather, from the daily time frame. All right. We're going to start with the weekly. Alright, so this is EURUSD from the weekly time frame. Alright, and if you're more conversant or you've not watched my market structure video, this is where I would urge you to go watch my market structure video. Now, basic market structure teaches us one thing: higher highs and higher lows. Now, if we want to point out our higher highs and higher lows, how do we know? Higher highs, higher lows, lower lows, and lower highs. So basically, we've recognized one thing, that we are bullish. All right, that is the first part of the whole thing. On the weekly time frame, we are bullish. And how do I know we are bullish? We've not had a change of character that shows us that price is going to change to another direction. If you don't know what the change of character is, you don't know what uh, a change of character and a trend continuation is. A change of character just simply indicates that price is going to move from one direction that it's focused in, yeah, to another direction. And how that usually happens is where we have a sweep of liquidity and a break of market structure. So when you have a sweep of liquidity and you have a break of market structure, it shows you already that price is going to move in an opposite direction. This would be when we are, like right now, let's just say in this particular view right now here, in this drawing, we're in a downtrend, right? But once price completely sweeps this low, right? Once price completely sweeps this low and breaks the previous high, sweeps the previous higher low, right? The previous higher low, and turns and then breaks the higher high, then you have a change of trend, right? Then it will now be something like this afterwards. Then you now have the same thing in case there's a change of character again, to be this with that sweep that's happened, something like that. That is just how a change of character is. Meanwhile, a trend continuation is just minor structures. This when price breaks, trend continuation, price breaks, trend continuation. And as you can see from what we've had in this EUR USD diagram, give me a second. Alright, as you can see in this EUR USD diagram, we can see that price has been moving in an upward direction, right? The change of character had happened down here, right? There is the sweep of liquidity and there is the break of market structure. Already that tells us that price is already moving to the upside, right? Then it broke another high again, doing the same thing. Now, the thing about this is, if you know if you understand the market structure video, like the second algo market structure video, we said one thing: there is always a B. What does the B? Price always comes out to take out the B, right? But there's one thing about price, right? Sometimes it doesn't necessarily always have to like come back. It doesn't always come back, right? Especially when it's on a higher time frame, things like the weekly. Now, if you look at this here, we have a sweep of liquidity and we have a break of this high right here, and then there is this B staring at us right here. Price have not come out to take out the B. And if you followed in my entry, like the entry, you will know that this is an engulfing candle, or most people like to call it an order block, right? So this place will be a perfect entry if price would ever return, right? Or maybe this high here, this breaker block right here. But price has not really come to take it. So what do? We follow the price action we have there. So what did price do instead? Price don't focus on this one. It focus on a more recent uh breakout. Right? So price broke this high. Let's say price broke this high and focused on what? a more recent liquidity that was shown, ignoring this one. Maybe in the future we can have a situation where price, like here now, price has swept here and it has broken this high. We can expect price to tag something here and then dump to the downside. Very possible to take out this here, but you also need to look at the fundamentals of things. You don't expect the economy of a country to keep declining every single time. Obviously we all expect it to keep advancing, to keep moving up. So the possibility of price to eventually just dump will be something of a great flow, or great flow in the economy before we can see something this, you know, in the currency at large, before we can see something dump this way. All right. So on the weekly time frame, let's focus on what we have here. All right. When you're dealing with the forex market, you also need to know what liquid the fundamental side of things. So we have a breakout right here, and just like I told you, once we have a breakout, focus on the next breakout, right? So the next breakout that happened was here. This is on the weekly time frame, by the way. So price broke this high right here, and this is what our B, and this is what our B. So like I said, can be a single candle provided it's a what? It's a V shape on the lower time frame. And if you can see, you see that that place is a very, very good and very, very nice V shape. See, if that's not enough, you can use the V, the line chart. You see it's a V shape. All right. So now that we have that, now that we've already understood on that place here that okay, this V shape is like has been taken out, liquidity has been taken out. So the next thing we're going to look for is price to do what? For price to take out this high. This take out what? This high, which is what do we call this? If you have been following up, you know that this is what our C. Our C is our swing high. So A for the entry, B for liquidity, and C for the target. All right. So now, based off what we've been seeing for the past how many weeks, we've been consolidating. We've been bouncing on and off this particular C. We've taken it out here, but we've not broken it. So if we've not broken it per se, let's just focus on what we have more recent. So now, let's focus on what we have more recent, knowing fully well that price is already bullish. Like we've not seen anything that shows you that price is bearish just yet. Like nothing really big has happened. So like I said before we can see price being bearish, we have to see this entire, let me just say it now, we have to see this low here taken out. Either this low or this low taken out fully, right, with a body. Price breaks it out with a body. But this is the weekly time frame. It's too much of a stress for us to focus on. So let's just focus on what we have, which is more current here, which is here. This is just this particular price action. The point is market structure just tells us that we are bullish, right? So let's focus on this particular side of the market structure. Now, once we do what? Once we get a breakout that shows us that price is moving, is continuing the trend, which has happened here. The breakout has happened here, right? And if you've noticed very well from my previous videos, right, this is what we call the breakout block right here, because the liquidity is somewhere here. How do we know the liquidity is somewhere here? Go to lower time frame and you get to pick out your V shape. Look at this. This is your V shape right here. Do you see this? This is your V shape right here. This is your V shape right here. So based off what we've had so far, if you check the weekly time frame, right, based on what we've had so far, we expect price to take out this V shape. I said it once in my videos while explaining liquidity. Price comes for two things. It comes to rebalance old imbalances and it comes to take out liquidity. So this is a liquidity. And when we say rebalancing old imbalances, we're talking of fair value gaps. I don't really trade fair value gaps, but this is a gap. It's just a way to tell you that there is a gap in here, right? This is not per se, yeah, it's a gap. There's a gap in here that price is supposed to take out. So we have a gap. We have our gap looking at us right here. We have our liquidity. Two things that pushes the price forward. Now we'll go to the daily time frame, knowing fully well that we expect price on the weekly time frame to come to the zone. Right, let's look at it from the line chart so we can draw the exact drawing. Let me clean out, let me take everything. All right, so this is where our entry is on the weekly. This is where we expect price to come to on the weekly. All right, and obviously this is our what? Our C. All right, so our A or B, which is here, which is our this B here, the V shape, and then this is our C. So we're looking for how to buy price onto this level. We are not looking to mess around with this level at all. We're just focusing on the current price action. So this level is what we're looking for. Now let's go to the daily time frame. Now on the daily time frame, when you scale down to the daily time frame, right, we scale down to the daily time frame, what do we want to do? We want to see price take out liquidity on the daily time frame. Now, the thing is, when you look at the weekly here, price already recently did what? Price already came to this level already, right? And this is the B we are already talking about. So we're expecting price to do what? Come to this level. So as of last week, price came to this level and has rejected. If you were following my key level, right, my key level video, this is an A-shaped key level. In other words, and what? An RBS, right? Resistance, break, right? Resistance got broken and turned into a support. So price did what? Price tapped and rejected. That is what we're looking for. So price has tapped and rejected. On the lower time frame, what do we want to see? A breakout, a daily breakout. So whatever time frame that you look for the rejection, the time frame lower has to give you the breakout. So the weekly time frame had broken, had given us the rejection. So we go to the daily, right? And we get to see what happened on the daily. So on the daily, we get to break it down even lower. Now, on the daily, what do we see? We get to see this engulfing candle right here. This is an extra confirmation to us. This is another extra confirmation to us that price will obviously come to this level. This is a strong bullish, should I call it a strong bullish pusher, something like that. Let me call it that way. So this will definitely push the price upwards. So if we're already seeing that the price is going to be pushed upwards, right, because of this strong bullish engulfing candle or order block or whatever it is we're going to call it, yeah, just like we've told ourselves, like once the price closes, we'll wait for it to reject, give us the next candle, right? The next candle has to close, and then we take above it. So this is where price eventually came down to, following our weekly time frame, bias. So what do we get to see? We get to see that price did what? Price rejected off it. Now, when it comes to rejection, maybe I didn't say it in the video. You don't wait for the rejection and take your breakout that day. Price has to fully reject, like with a body, right? Price has to fully reject before you start looking for your buys. What do I mean? So as you can see in this particular spot right here, see that price rejected fully of this place. So which means the next thing we want to see this day is a breakout. Now we'll go to the 4-hour time frame. Now let's just say we are already at this day. This particular day now, right? So this is where we are right now when we come to the chart and see that based off our analysis, based off our bias, prices has rejected. So price reject, we've waited for price to come to this level from the weekly time frame. We've seen a confirmation of the daily that this particular zone is somewhere that price is definitely going to buy from because of this order block / engulfing candle. Now that price has come to this level, we also have our liquidity here. Now that price has come to this level, yeah, we are going to wait for what? Price to reject, right? We are going to wait for price to reject. Bias, this is where the bias comes in. So we wait for price to reject. So price has rejected that day. Then the next day, right, when price rejected, we have to wait for a 4 hours breakout. Now, a 4 hours breakout or 4 hours change of character shows us that a trend is going to be switched or maybe it's going to be continued. Alright, so all we need to just wait for is it. Sometimes, yeah, I'll mostly advise you to wait for a change of character, because the change of character will tell you that this is already selling. So obviously, the next thing we're going to look for is buys. So next thing we want to see now is what is a 4 hours breakout. So we go to the 4-hour time frame, and voila, what do we see first when we come to the chart? There is a breakout right here. Do you see this? This is a very solid breakout. Do you see this? This is a very solid breakout. Alright, this is a very solid breakout. Now, what do we do next? Obviously, we want to set our entry here because liquidity is lying around at this point. Alright, so what happens? This is our liquidity that is lying out. This is our liquidity. This is our B lying around at this point. Yes, but you need to take note of something sometimes here. When you have a breakout on 1 hour time, let's just say a lower time frame, when you want to analyze charts here, try to go through all the view, or try to go through all of it, right? Try to go through all of it so you don't get to miss anything at all, right? So when that 4-hour breakout has happened right here, you understand, most people want to take their entry from here, blah blah blah. Like, yes, this is where I want to take my entry from based off the fact that there's B, but you need to see things from every time frame. So for me, I went to the 1 hour time frame and refined my entry. When I mean refining, is I don't want my stop loss to be somewhere here, Then I'll take my entry from here and I'll have to put my stop loss here because that will be the best place you have to put your entry, your stop loss. Right? That will be the only place that I feel like I can tell anybody to put their stop loss. Keep your stop loss below where price is meant to sweep. So if you imagine you want to set your entry here now, your entry here, and see the amount of pips you're about to cover, when it's not like you are the richest person in the world to carry this amount of stop loss. Look at this. You're about to set 28 pips stop loss with how many? Look at this. While this might be good for a lot of people here, I don't really advise this, bro. I advise you to just get your precision right when you're dealing with key levels, right? So that breakout that happened on the 4-hour time frame, what do we get to see? From my 1 or 2 years of trading this particular strategy, this engulfing candle 90% of the time is a stronger boost. How do I know this? Let's look at when this happened to us at the daily time frame. Look at this. Do you see here the same thing? The breakout that happened here on the daily time frame. Do you see it? The same thing has happened here. There was even a failed QM, but price came for what? The engulfing candle / order block. People call it order block. So that's to tell you that the order block or the engulfing candle is a strong bullish, should I call it pusher? It's a strong indication that the price is going to buy off that zone. A lot of people be sitting down here. So if you've had the same indication on the daily time frame, why waste around? On the 1-hour time frame, we have something like this right here. All right. So I have my entry here. Now, for you not to cover or for you not to make mistake, right? For you not to make mistake or something, because like if you look at it from here, price actually missed this, right? Price actually missed this. But where I took my entry from, right? I'm not one to actually. I took my entry from mid the fair value gap, right? So there is one thing I actually want to tell you now. So I cover up, not just I take at the middle point of the fair value gap. That's the first thing. I'm able to cover up this particular engulfing candle because to me, no matter how anybody wants to tell me, because of this particular liquidity here, this is the best place. This is the best place to actually take your entry. But because price most of the time respects engulfing candles and everything here, so this is what I did. There are about 3, if you check it, there are about 3 or 4 breakouts. Look at this. All these are highs, 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 highs. All these are breakout points. So I took my entry from the middle one. Now, what made this a very good, or should I call it a smart move, right, was because it was mid the gap I was talking to you about. Number one, it is in the middle of the gap. That's the first thing, both on the 1-hour and on the 4-hour time frame, right? It is very much closer. Sorry, give me a second. It is very much closer, right, to this compared to this, right? It is very much closer to this compared to this. So this is where I executed my own from. A lot of people have taken from here, missed entry. A lot of people have taken from here also. Okay, yes, they will have actually gotten, because this is another breakout right here, right? So I took mine from here and I had my entry something like this. Okay, hold on, let me look at this right here. I have to take all the diagrams out, so I don't think anybody will have seen it, but if you're able to go back to confirm, you can be able to go back and confirm. Sure, you will see what I'm talking about. So from here, I took my entry from here. So now my aim, right? Remember the C that I told you guys about. Remember the C I told you about. Our aim, sorry, our aim right from the daily time frame, right from the daily time frame is here. We're aiming for this high, right? This is our aim. But I advise most people here to keep their entry or their taste, make their, should I call it, your profit target strictly on the mechanical level, right? Because if you look at it, the whole of today here, EUR USD has been consolidating. It has been consolidating, right? Even when I thought that price would just give us a little booster from the daily time, from the 1-hour time frame, right? By following this particular pattern here, there is a pattern somewhere here. Look at this. There is this breakout that has happened here. So I took my entry from this point because I told you if it touches a little bit, so let's highlight the whole candle. So I took my entry, the second entry from here, I think somewhere here. Yes, something like this. I thought that would be enough booster for price to, go to the upside, but we've been ranging the whole day. I am going to give you, at the end of this video, you'll be able to see the results of what happened there, if this turned out to be a loss or a win. Alright, but at the end of the day, I covered the sweep of the liquidity right here. At the end of the day, this is the second entry I followed, and for me not to be in a little bit of cashew nuts or problems, I followed the closest high I could find myself. So this should be like a TP1. If there's one thing I'm going to understand about the market is adding to winners here helps you a lot. Adding to winners is like compounding based off breakouts, compounding based off like re-entries, yeah, re-entries. So you're already winning. What do you get to see? A breakout, wait for liquidity based off market structure and enter again. That's just how it is. Alright, see your strategy repeated on lower time frame again. Enter. So from here, I got to see this and it also followed something on a 30 minutes time frame. If you check the 30 minutes time frame, okay, you get to see the same thing. Engulfing candle, price rejected off it, and we've been bullish ever since. So here, this is the second thing. So just like I told you, we didn't really use the QML. Instead, the entry level we used there was the RBS. We use the RBS in this place. We use the order block slash engulfing candle in this place, right? We didn't really use the field QM. Although we had the chance, we could use it here on the daily time frame because if you look at it very well, you get that this is also a what? This is a field QM right here. This is a field QM level right here. This is the field head and shoulders, not the following normal head and shoulders. So here, right now, let's just say you didn't even want to analyze based off the weekly time frame, that you wanted to start from the daily time frame, right? Because me personally, I don't really check the weekly time frame. I mostly check the daily time frame. So when you want to check off the daily time frame and you want to follow like the bias, like you want to build your bias from the daily time frame, it's actually very important for you to check on the weekly too. You need to you need to see things one way. Look at this. To show you that price has been bullish, we've swept the last low. Do you see this? We swept the last low. Yeah. Now we swept the last low, we've broken this out. Do you see this? Now that we've broken this out, right? We have what? Our field QM. Do you understand? We have our field QM right here. Right? Normally, yeah, you want to wait for the field QM before the breakout, but anywho, let's focus on the more recent breakouts here. Right? Let's focus on this. Right? Because we have these breakouts, we already know, right? But let's focus on these little breakouts that is happening right here. Right? You get to see that the field QM is here. Now we have the field QM right here. Another indication is what? The engulfing candle slash order block. I keep calling it slash so that I don't get the name mixed up. So now that we have our market structure slash bias in place, what are we waiting for? Our little add-ons, our confirmations. What do we do when we get to see that this is what we've known that this price is meant to buy? Right? We've seen our A, we've seen our C, which is up here, and we've seen our B, which is this, right? We've seen our B, which is this, the liquidity right here. We've seen our price have swept, price have completely changed character, and we know that we're going to be buying on the daily time frame for a while. Understand? So we've seen everything we're looking for. We've seen that there is an engulfing candle that shows us what we're looking for, right? So what do you get to see? We wait for the rejection. Price rejected off this V-shaped key level right here, right? Price rejected off the V-shaped key level. If you think like if you need more proof, you see this. This is a V-shaped key level, right? Let's draw the line. All right, you see that price rejected of that V-shaped key level right there. So V-shaped key level rejected. Next thing we want to see is what the 4 hours breakout. 4 hours breakout happened. We go down to the 1 hour time frame. We marked out the 4 hours breakout. We'll go down to the 1 hour time frame to mark out a more smaller breakout if possible, right? If there is a more smaller breakout or if there are engulfing candles. So we've marked it out, right? This is it. The breakout has happened here. Also in the midst of fair value gaps, we highlight it. All right, so we target here. If one might also target here, this is also a breakout right here. There's a breakout here. There's a little breakout here. So one might also target here. Let's mark it out. Let's just say we drag this over here. Right. One might also target here. However way you're able to cover this engulfing or slash called order block right here. You set your entry. Now for those that think the stop loss is even too much, you get to wait for what? Confirmation setups. Now, how do you deal with confirmation setups? For me, confirmation setups are just basically waiting for, it's just like adding to winners. We're like waiting for your strategy repeated on the lower time frame. What do I mean? So the same way we've been looking at the weekly, if maybe you're a swing, like a very, very good swing trader, right? A lot of people take their entry from the weekly. Now, you waiting for price to get to this level already is already a very good entry. but you are trading on the weekly time frame. So what do? You go down to the daily and scale down to find good entries. On the daily, see the same thing, but you cannot execute on the daily, right? So you scale down again based off market structure alone, right? You scale down again and you look for, like, it's like refining your entry to just focus on what is going on in the moment. Just refining your entry, refining your entry, refining your entry. So we've gone out to the 4 hours. Now we've gone out to the 1 hour too. Now the 1 hour, even because we've had a choppy market so far, right? You can see that price broke out this level. Let me take this out. You see that price broke out this level here. This level was taken out. Now the price broke out this level. This is the B automatically. So we are looking for what price to take out the B. And if you focus based on the video I've sent in the group, like I've sent, sorry, to my playlist here. You see that that's the B, right? Excuse me. You see that there is a more better entry or maybe the 5 minutes, 30 minutes or anything, but it's a key level after. Look at this, what I was telling you, right? It's a key level after. Do you get to see that there is a V shape right here? And this is what? This is the head and shoulders, right? The head and shoulders right here. Tap this level and we bought. If you need more clarity, go down to the 15. You will definitely see a key level there. The key level, like I said, the open close key level. This is another entry that price did was price rejected off. Look at this. Yes, the open close key level. Now let's go down to the 5 minutes again in case that's not good enough and see if we can catch something there. Let's see if we can catch something there. All right, I think it's the same thing, the same open close key level. All right, the same open close key level. Okay, do we have like, yeah, it's the same open close key level, right? So at the end of the day, you pick the key level that happens after the liquidity, right? You could also take your entry from here, but obviously this is a missed entry, right? That's one thing about waiting for re-entries. Most of the time, because of the boost that happens in the market, you could always miss it, right? You could always miss it. So picking my entry directly off the 1 hour time frame, of the 1 hour time frame, because the breakout that happened here, right? Picking my entry directly, right? We expect price to do, price tapped it and price has been on the bullish, although it's been rejecting, coming back, going up, coming back, going up the whole day. Nobody knows why. Nobody knows why. So yeah, there's this. There is also a re-entry if you decide to follow with whatever it is you see at that point in time. So there is a, let's call this if an engulfing candle. So this is an engulfing candle that has happened right here. And when I told you the moment price taps the engulfing candle, like the high of the engulfing of the candle that is being engulfed, right? So this is the high price tapped at. We expect price to do what? Go to the lower side. And if you want more clarity on the 15 minutes time frame, what did I say your price will look like when it goes ahead to tap? It will look like another breakout. Let's see if we can find something like that. If you don't find on the 5 minutes, we'll find on the 1 minute. Can I show you? You will definitely see a breakout. See, there are breakouts, numerous amount of breakouts. All right. But anyway, that's besides the point, right? These are these are ways to just find your entries. Right? These are ways to just find your entries. The market EURUSD has been chopping the whole day, right? It has been chopping the whole day. So that's why it's been consolidating like this. I don't know what it's waiting for, but yeah, this is what we begin. This is how I approach the market. For I look for my market structure on the I identify market structure on the weekly or on the daily for my buyers. I wait for breakouts on the 4 hour time frame. But before I wait for breakouts, I make sure the daily is rejecting off a key level, right? So the key level weekly gives me market structure, daily also give market structure, but I wait for rejection on the daily time frame. So when the rejection happens on the daily time frame, the 4 hours I wait for breakout, right? I wait for breakout. So once the breakout happens on the 4 hours, on the 1 hour, I wait for inducement, liquidity, whatever B I'm looking for, whatever way I can find the B. 30 minutes, I can also wait for inducement. However way, take my entry from there and boom. See what I'm talking about? Price tapped the low and you see it has rejected off it. Let's see. So I'm going to show you how this trade later went on, whether I eventually took an L out of this. At the end of the day, right, my SL is somewhere here. My SL is below this point. So if price reverses on me and takes me out, there are two things I'm thinking will happen, right? Price wants to take out this liquidity, right? This sweep this low. Because I told you when you are dealing with this here, you want to wait for price to sweep out. Like it gives you change of character, just gives you more belief that price is going to push according to your direction. But in this case, we didn't really get a sweep. Instead, we got a breakout, which is this level, right? So price might want to sweep this low and give us a very solid, a better breakout to show that price is changing character completely. So that is the only reason I see this low or me getting taken out eventually. So this low getting swept is the only fear I have, that price will take me out on here and move to the upside eventually. That is the only fear I have. At the end of the day, I have risk management plan. I have my risk management plan with me. So I'm going to show this trend. I'm going to show this the result at the end of the video. Like obviously it's already the end of the video. So before I post this, you get to see. I'll wait to when the price, like the trade, gets taken out, like hits my target completely, right? Just so you know, I'm not waiting for this target to get hit uh I'm not waiting for this target to eventually get hit. This target here, I'm not waiting for it to fully this target here, I'm not waiting for it to fully get hit before I take my profit. My profit is around here, is this level, so I'm taking profit here, but this is where I expect, this is the C I expect price to eventually get to. So here is where I'm taking my targets, I'm taking profit. So wherever I place, if I eventually hit my take profit, is going to be sent, you will see it here. So that'll be all for today's video. Thank you for joining. All right, so apparently, ladies and gentlemen, we've concluded on the trade, and it didn't really go the way we wanted to. Let's consider this our first, or my first, documentation of how I trade. But at the end of the day, yeah, I was able to pull some new information out of it, and I don't really know if I'm correct, but we're still waiting. We're still waiting. I feel like I eventually ended up being the B that I always talk about, not to buy or sell from. But regardless, yeah, regardless, it turned out to be an L. Alright, so this is the trade. This is the EURUSD trade. It was going up in our favor for a while, right? That was everything we needed. The breakouts was here, the B was here, right? Got tapped, and then we're up for a while, then got to the dump. Right? I don't know where the dump is coming from. Maybe there's an information I'm missing here or there, but I feel like the one thing I know that didn't go so well, right, was the fact that, let me show you guys on the daily time frame, right? Was this might have actually been the B. And if this is actually the B, then maybe this is where to buy from. Or it's also possible that this is the B. This is also the B, right? And this might actually be the B, and this will be the perfect place to enter from. Regardless of whatever it is here, at the end of the day, right, we're gonna get rejections. Like if market should obviously reject, don't forget this is the this is the head and shoulders pattern, right? So if price should tap this, the head and shoulders structure pattern, right? So if price should tap this level and reject fully off it, right? If price should tap this level and reject fully off it, then tomorrow we'll be looking forward to, that's today, right? Then tomorrow we'll be looking forward to uh a breakout. We'll be looking forward to a breakout at this level by tomorrow to see if we can actually buy and continue the trend. Regardless of whatever it is here, like just like I said previously, yeah, this is one thing I was already scared of. Price coming to sweep this low, which has happened to sweep this low. This is why I always say that when it comes to price action, like when it comes to choosing what you're supposed to use, right? What you're supposed to use, whether it's a breakout or a change of character, I would always advise to use a change of character, because the breakout could easily be taken out, just like here as we've seen. So we focused on the breakout that was here, and it didn't really do so well. I mean, give us a little bit of give us like 1 to 1 RR, I think, 1 to 1 RR, and then reversed on us. So we have a sweep of liquidity. Now if price should break out on this level, or maybe break out on this level, whatever place he wants to break out, is a change of character, and it's a clear indication that we are going to keep buying. Right, so that would only be sure if by the end of today, right, if by the end of today we get to have a full-on breakout. I don't know what's wrong with my trading view, but like at the end of the day, we get to have a full-on rejection, right? Rejection, then 4 hours tomorrow, on the 4 hour time frame, we get to look for breakouts, wait for inducement, in other words liquidity, right, to boost to the upside. Yeah, so that will be the end of putting it together video.